Hello, everyone, and welcome to today's webinar, Operate, Optimize, Exit, Montauk AI's three-step process for successful home-based care exits, sponsored by Montauk AI. I'm Morgan Gonzalez. I'm the Associate Editor of Home Healthcare News. Thanks so much for joining us today. I'm excited to get going into today's presentation, but first, I'm going to go over just a few housekeeping notes. First, you'll see a variety of boxes on your screen. These can be moved and resized to meet your preferences. I want to call out one box specifically. Take a second to check out the Q&A box. This is where you can ask questions throughout the webinar. We do have a specific Q&A question at the end, but feel free to ask your questions as they come to you, including on demand. If you are watching this webinar on demand, still submit those questions and our presenters can get back to you. A recording of this webinar will be available on demand on Home Healthcare News website for you to replay or share with a colleague as you'd like. If you run into any technical issues today, first just try refreshing your browser, and then if you're still having a problem, reach out to us through that Q&A box and we'll give you a hand. And then I'd like to just say thank you again to Montauk AI for sponsoring this webinar, and then I'll introduce today's speakers. We have with us today Jarrett Bauer, the CEO of Montauk AI, and Brian Mills, the Senior Vice President of Growth at the Pennant Group. I'll go over a little bit about Jarrett and Brian's backgrounds. Jarrett's CEO of Montauk AI, a leading investment banking group focused on home-based primary care companies. He specializes in advising and executing transactions for hospice, home health, and home care. With 50% to 70% of executed LOIs failing to close in the home-based care sector, Jarrett is on a mission to bring greater certainty and efficiency to the deal-making process. And then Brian, who's with us today, has been leading growth and acquisition efforts for the Pennant Group since November 2022. In his time at Pennant, Brian has played a key role in sourcing, negotiating, and integrating home health and hospice acquisitions and joint ventures across 9 states. That includes more than 12,000 patients and 3,000 employees. And then, Jarrett, I'd love to get started. Can you talk to me about the problem that you want to solve here?
Definitely. And before we get going, Brian, Morgan, are you guys excited?
You bet.
Absolutely.
I love that. I love that. Thank you. I am so excited to tell you about our process and my background too. So I started Montauk AI because I saw firsthand that the exit process for home-based care providers is broken. And really, those 4 big problems that we set out to solve are: 1, bulge bracket investment banking is too dependent on people, and what owners want is often forgotten. 2, selling your business involves a ton of Excel modeling and forecasting, and if that analysis is coming from your internal team, it's hurting margins. 3, as Morgan said, 50 to 70% of executed LOIs fail to close in the home-based care industry, and we really work hard to make sure that number is improving. And then 4, when companies are selling, often clinical results and clinical excellence is failing, is not being part of that conversation. So we really work hard to make sure that's part of the conversation and that great companies get bought. So what we're talking today. So we are a purpose-built investment bank for hospice, home care, and home health providers. Our research-driven approach helps companies in 3 ways: operate, optimize, and exit. And today's learning objectives are to show how we help clients tangibly with those 3 steps. And even if you're not using our software or services, how you can do these on your own. And then to hear from Brian Mills from Pennant on the key operating metrics that he looks at before acquiring companies. And then finally, show you a demo of our solution and show how that it helps with margin control and operational discipline.
Awesome. Thanks. Yeah, Jarrett, I was just going to ask, can you talk us through the operate framework that you've got up on the slides here?
Definitely. So the first part of operating is just understanding your financials and really going through and looking at everything. really. But going through the revenue, the gross margin, the EBITDA, the clinical productivity, referral growth, where referrals are coming from, the staffing, utilization, and then clinical outcomes, benchmarking, and so much of finance, and especially in home care and hospice, everything is retroactive. But really, if you get these metrics underneath your fingertips, and it's not just in one person in the organization, it's across the management teams, you can really start projecting out forward. And we're going to show what that looks like. So before we project out forward, we have to go through and grab these data points. And this is sometimes in the EMR, QuickBooks, but it's grabbing the census data, the clinical results. We're going to just shoot through the readmission, the actual and forecast. And this is kind of what great looks like, in my opinion. Projecting out 2 to 3 years to say, we have confidence that we're going to be here. Brian, just asking, if somebody was presenting this type of company in front of you, what would be other questions that you'd ask too?
Yeah, so I think, principally when we're looking at a home health or a hospice business, what we're looking at is going to be for a few months. We're going to look back for a year or even 3 years often, right? And so I think that's one thing is that there's, when you talk about, optimizing, it's long term. So having an established pattern. So part of, if you have an idea in mind for an exit, if you're an owner and you're thinking this is, maybe the value that I want to get out of my business, or a particular sort of goal in mind, considering that buyers are going to look at historical census, as Jarrett mentioned, historical financial viability, and then the source of your revenue, right? That you have a diverse sources of revenue that are going to translate for a buyer. So if it's my brother is where I depend on all my referrals, and when I sell it to you, you're not going to have the relationship with my brother that I do. And so being aware of where are these referral sources coming from, and opportunities that we're creating at the company currently, and are those going to transfer and be attractive for a potential buyer? I think that's really critical. And then really that clinical quality is going to be the most important factor, really, coming through. And you talked about the likelihood of LOIs going through or not going through. One of the major roadblocks or hurdles that we found in the few transactions where we've had to walk away from an LOI, it's from discovering some underlying quality issues with clinical quality. So I think just investing the time to really to key in on clinical quality metrics as an operator is so important.
That's great. Yes, that's absolutely great. So if you can, as Brian said, retroactively look back and understand your financials, your clinical numbers, you can look forward, and now you're in a great position to optimize. And that optimizing piece, which I love too, is all this data is at your fingertips, and now you can make an unbelievable strategic plan. And in that strategic plan, you're looking at the workforce utilization, the HR pipeline, the referral conversions, and then those clinical outcomes.
Awesome. Yeah, I'm excited to hear more about the optimized part, Jarrett.
Thank you. Well, so much. So now we have our finance, we have our forecast, we have our strategic plan, and then it comes down to, for great operators, daily management, weekly management, monthly management, so that you can stay on track and that you can make sure your census is increasing, all your key KPIs are going up and to the right, and you're correctively making action if not. So much of that comes down to, we'll show how our system does it, but as we said, you don't need to use our system in that if you want to do it manually. But really, everything should be working in lockstep. If census is increasing, yes, hire. But there's so many companies that we come in and then we see, the HR team is not really talking to the finance team. you're hiring, but maybe census is declining for this month. If everything can be mapped and shown in that strategic plan, and then optimizing that part, you're off into just a great start. And I think that's when you can start changing your EBITDA margins and your growth. So it's an example of a client that we worked with, to optimize them. And the fun part, as we said too, is once you start making improvements, the biggest improvements will come in this year's EBITDA. And it's going to be because that is the easiest number to change when everything is optimized to the full slate. So now you've operated, you've optimized, now it's the exit. And so much of the exit is, reaching out to the right buyers, making sure that everything's in order for diligence, and talking to the right buyer. And so much of it's trust. So Brian, from your side, what do you think the key components are to make sure that hospice, home care, and home health agencies can exit the right way at the final step?
Yeah, so for those who are watching, I got to know Jarrett through a transaction we did last year together, and we acquired a home health operation that Jarrett helped get to market. And so I think some of the things that they did well, and that if you're in a position where you're thinking like, okay, I'm thinking maybe it's time for a transition, whether it's because of retirement or you have a new opportunity, I think the things to really consider to set yourself up for success in the exit. One, I mentioned before, just as you're operating over the course of years, recognizing that all that historical operation is going to matter. It's not sort of a projection of what I think I can do next year. That most buyers are going to be, if you say, well, I'm going to do all of these things in the next 2 years, but historically you haven't done those things, that's a buyer's not going to fall in love with something that you claim you can do but have never done before, right? And so that historical, just day-to-day management and operation really is so important, and buyers are going to take the time to look at that. I think when you're identifying a buyer, what we usually sort of share that I to try and set ourselves apart is part of what you're trying to evaluate as you're vetting them just like they are you, is trying to find a buyer who can offer you certainty to close. And usually that means that they've done some diligence before the letter of intent stage. So they've asked you the key questions. They've asked you about your census. They've asked you about your payer mix. They've asked you about key like long-term liabilities, like if you have a really long lease that's still got to remain in place, or some other significant liabilities that need to carry, or contracts that have a big termination fee, right? They've asked you about clinical quality a little bit, right? There's not a lot they can do that before they get into an LOI and diligence, but they've asked about maybe some, hey, do you have any adverse survey results or recent overpayment claims, right? So if they've asked those questions prior to an LOI, the likelihood that they're going to give you an offer that's going to be consistent with what they're going to follow through on is much, much higher. Because then when they come with the LOI, the valuation's going to be consistent with understanding what your business really is. And there's less likelihood of finding something during diligence that they're surprised by. And so I think the ability to be organized enough to be transparent in that early stage, that when you go to market, you're prepared to have a couple of years of financials to share, that you're prepared to have some clinical quality or understand how you're going to be able to share access to some clinical records or your EMR with the seller. Just have a plan before you go to market, and working with someone like Jarrett or other folks that can help you do that, I think is just so important. I know Jarrett's going to share their solution with us today, but I just think taking the time to prepare those things as you go to market will help you have, I think also just your expectations will be more consistent with what you'll find in the market. The more information that you can have prepared at the time you go to market, then you'll kind of have a more clear understanding of what to expect when the market starts providing feedback to you about what, whether it's timing or valuation for selling your business. So I hope that's helpful. If there's other things, please drop them in the Q&A, or Jarrett or Morgan, feel free to ask more, but that's kind of, those are my thoughts.
And before we show our solution and how so many of these steps are automated, Brian, when people are sitting down with you, how do they know, okay, this is Pennant, we've done this many deals. How do they tell if it's a qualified investor that's really interested in buying their business, or if it's kind of a predatory investor that's kind of will walk away later on? How can they gauge that?
Well, that's a great question. I think probably the kinds of questions they're asking you is gonna be part of it, right? And so if they're asking, you can sort of get a feel for this is someone who understands my industry. If you do a little bit of research on a buyer, you can tell whether they're in the industry. And so like Pennant, for example, you can see that we operate home health and hospice businesses, so we acquired them to operate them. I think that is a difference, right? When you look at, okay, well, who is this? And are they in this industry, or is this the first one they've ever bought? That's not necessarily a non-starter, but it's a useful data point to understand, like, okay, well, they haven't been in this industry before. And so what's the likelihood that, is this just because they're getting started, or is this a fly-by-night sort of operation, right? I think so. Having some awareness of what that business's sort of current industry knowledge is, but I think you know your business, and the kinds of things that you worry about every day when you go to work and when you're checking your own data. If they're not asking about those things, that might be to me a little bit of a concern. They're not, the kinds of questions they're asking suggest to me that they're not really interested in understanding the fundamentals of my business. So what's the real plan here, right? Or that they don't care about those things enough to be able to throw an offer that's not tied to those, which means that either they're going to walk away from the offer, or the offer is going to drastically change when they actually do take the time to ask those questions.
That's great. And outside of the financials, what are things that great buyers like yourself look at when you're making that decision to acquire an organization?
Yeah, I mean, so we at Pennant, we talk all the time about 4 cornerstones, and one of those cornerstones is financial, one of them is clinical, one of them is culture, and one of them is community. And so those are what we sort of measure ourselves on, and it was what we look for in an acquisition opportunity as well. So financial results, right, that the revenue looks sustainable, the clinical quality. That's where we're going in and looking at the EMR during diligence, and we're trying to understand, or we're looking at, is there a likelihood for a hospice cap or a potential overpayment claim? And then the community and culture part, what I would say about those, community to us means, what's the reputation in the community? How is that operation currently serving the community? That really matters to us, that we're being a solution for the community. And so there's a need for this business. And so are they currently a solution that's really valued by the community? And then the culture, turnover, right? We really are concerned about, when we acquire a business, we're concerned about keeping folks around. Especially you think about these frontline healthcare workers, like there's a shortage everywhere, and they're such a valuable, important part of the workforce. And for these businesses, just invaluable to have really good caretakers. And so to look at healthcare, these folks, right, the nurses and the physical therapists and the folks who are doing the work, and have they stuck around, right? And that's usually a pretty good indication if you have a bunch of long-term employees that there's a culture there that is going to, right? You can change culture when you acquire a business, and we've certainly had to do that a few times. But generally, the most successful transitions are where we can find alignment in culture. And so we look for businesses that think about their people the way that we do, which is that we have one of our values is customer second, which is just our way of saying employees first. If we take care of our people, they're going to take care of their patients, right? And so when we find alignment that way, so I would say, you can steal in your own mind those 4 cornerstones, that concept of like, those are the things that if that a buyer is going to sort of, at least a buyer that's going to operate and wants to keep it long term, that's what we're going to look for.
I love that. And then, so Brian, if we have some owners on this webinar, they want to sell, they don't know if they're institutionally ready to actually do that. Is there 1 or 2 questions where they can that you could ask them, where they can kind of get to that yes or no, I'm actually ready to sell?
Yeah, I mean, I would say, so part of it is just getting organized, right? So when I think about that both clinically and financially, principally, right? Like, so am I ready for an exit? And I say like, well, if someone asked me tomorrow to go pull financial statements, could I do that? If someone asked me tomorrow, what's my current census and what's my average length of stay at my hospice, would I know that information tomorrow? how hard would it be for me to go get that information back to them? Because we have had experiences where someone says, hey, yeah, let's talk. Maybe it's an off-market opportunity that we've come to find out about. And then we ask for that information, and then it's weeks, months before they can get back to us because, one, they're busy operating, but two, they're kind of running day to day, but maybe not organized in that way. So I think that's part of it, is just taking the time to say, like, at any moment, if you really are serious, like, hey, I think it's time for us to make a transition. What do I know that I could share with someone else so that they could get a snapshot of my business, and how long would it take me to get that information together? And taking a minute. And I think whether it's, you know someone in the industry, whether it's finding an investment bank or a broker, there are lots of folks that can tell you sort of what those things are. But to me, really, it's the financial and the clinical things are going to get us to an LOI at least, right? And then we find out about lots of other things after that. But having those key data points for those two pieces at least gets you to the first stage.
I love that. I love that because it just brings it back to that operate, optimize, and exit piece. This idea that great companies are operating the right way, they're optimizing it every step of the way, and then they're exiting and then following mutual respect and mutual trust. So before we jump to our solution, anything else about the trust statement, the trust piece of just how you get to that trust level with the operators that you're acquiring, and how they can do that faster from their side?
Yeah, gosh, it's a great question, Jarrett. I think, it's funny. I still, as much as there's, and we're here to talk about technology and AI, there's a gut, like you meet somebody, you just sort of like, I talk to this person, and I can tell that they care about their patients, they care about their employees. So it's the same thing when you're talking to a buyer. I think there is a certain amount of, like, you've interviewed enough people to work at your company probably, or have interacted with enough either, referral sources or, medical directors, physicians, whoever, to sort of know, like, this person's invested in the industry for the right reasons, or not. So I think there's some of that, which is, I know, squishy, but that's just the truth. But then I think it is, take a minute to research the buyer, right? And go look at their website. And then as you're interviewing them too, they're not just interviewing you, right? And so ask them about their company, ask them how long they've been in business, and what's their strategy and what's their plan, and what are their goals for the transaction. It's not just a one-way street. Like I ask lots of questions, and sometimes sellers can feel like, they're getting interrogated and have to kind of come up with all this data. You're interviewing the buyer too, because you're going to have to live with them for at least a few months, probably longer, because of the change of ownership process with licensing in our industry. And so interview them too, ask them about their business and ask them what their plans are. And that, I don't think buyers or sellers should feel shy about doing that. I think a good buyer would welcome the opportunity to kind of open up and tell them a little bit about what their strategy is and why they are interested in their business. And I think that's something that maybe not every seller takes advantage of.
And is it appropriate for the seller to ask reverse information? Like if they actually have the proof of fund, how do they approach those questions?
It's a good question. Yeah. Right. So you want to know that, like, they say, oh, I'll pay $5 million for your business. And you want to know, do you have $5 million? Right. So I think, there's a couple of things. So a company like Pennant, we're a publicly traded company, and you could go on the website and see financial data, right? And there's an investor relations page with kind of our financials in it. And so if it's a publicly traded company, you could probably go find it yourself. I think what I would say is I don't think it's inappropriate prior to an LOI or during the LOI negotiation to understand, are you going to be getting financing for this? And have you already secured that financing, or is it in process? I think those are perfectly reasonable questions to ask. While if you maybe not in that introductory phone call, but if you receive an LOI and there isn't any discussion in the LOI about where the money's coming from, to say, we'll put in the first paragraph, like, we're a cash buyer, right? And so that there's not they kind of know that from the beginning. But if you're not, or if they don't say it one way or the other, I think it's a very appropriate question to ask. Are you going to need financing? And where are you at in the process of securing that financing?
That's great. It's almost like this last exit piece is like the trust category. So for that last bit too, the exit part, it's reaching out to qualified investors like Pennant, like the groups that we spoke about before, making sure that you have this idea of maximizing value, but certainty. I think that's a part that's often lacked. I mean, to Brian's point, the amount of clients that we've spoken to that said, hey, I signed an LOI and it's a private equity group. And it's like, well, did you actually ask those questions to make sure that there is the proof of funds and that they do have that actually on the way? And then speed of execution. And speed of execution, how long, Brian, should clients be thinking of the process being of once an LOI is signed to actually being funded?
Yeah, it's a great question. And I think I'm in some ways the wrong person to ask because Pennant moves really fast compared to most folks, I think. But so what I'll say is I think it can be done actually pretty quickly from the time you have an LOI to close. It can be a diligence period of, say, anywhere from 30 to 60 days. And so depending on if you can get and in home health and hospice deals, in my experience, the lawyers do their part negotiating the documents at the same time as the diligence process is happening. In other industries, like in senior living, which I also do, they often have one has to happen before the other. But in a lot of my home health and hospice transactions, those are happening at the same time, which means that you can go from an LOI to the deal getting signed and the diligence all happening at the same time, 60 or 90 days. I think we've closed a transaction once that was like 47 days after we signed the LOI, and the broker told me that was the fastest he'd ever done a deal, and he thought we were crazy. But we kind of have our system down for knowing what we're looking for, and we can do the diligence pretty quick. I think first of all, I think it's just important that there's transparency from the beginning, right? Which is that in the LOI that they stick to the date that they say. So if they say they can do it in 60 days, that's not nuts. Like if someone tells you that, that's believable. But more likely, it's going to be probably 90 to 120, I think is more typical. And if they get beyond that, then that just may be, because we'll do that. We'll tell a buyer, like, hey, a seller, we'll say, hey, look, we're really interested because of things that are happening in our business or other transactions. We couldn't do this deal for another 6 months. And if they're telling you that and you say, you know what, that's okay with me. I want to operate a little longer, and that's okay too. But I would say if the plan is to try and get under contract and really start progressing from the first day to right through to the closing, anywhere from 90 to 120 is a pretty standard, pretty typical timeframe.
That's so great. And then for clients, clinical due diligence is often a hard part to get through. What should they be doing like today so that they can get ready for that if they're actually serious on selling their business at some point?
Yeah, I mean, I think something that's really valuable is do you have an internal audit or triple check or some way that you're sort of regularly checking on, technical errors, right? Do we have signatures on the face-to-face? Do we have, just like little technical things, are we missing any of those? And then are you doing an audit, right? When you look at your charts, maybe your hospice, you see, what's our average length of stay? Gosh, that seems long. Have we, as our medical director or someone else kind of taken a minute to go back and look at, right, do these folks still qualify? Or do they meet the conditions of they still qualify for hospice? Pardon me. So I think that's a key part of it. And then the other thing that just be prepared for the fact that a qualified buyer is going to say, I want basically surveyor access to your EMR, and they're going to conduct their own. Whether they hire a third party, they do it in-house. They'll go in and they'll pick a sample. And so just to give you an idea of how we go about it is we'll take a sample of some percentage of all the charts, just a random sampling, pull them out. And then we have a scorecard that we've built. It's kind of a proprietary thing into our company, but I'm sure most folks have some way that they do that. And we use this scorecard to measure whether it's a pass or fail, whether that individual chart. And if we have too many that don't get a passing score because of whether it's technical issues or something that's missing from a chart or something that they didn't follow up on in a note or whatever, then we'll go back and take a second sample maybe and increase the sample size to see if that's going to be a persistent problem. Part of what we're looking at is it the same issue tracking across, like we just keep seeing the same issue over and over, or is it just sort of one-off, this nurse forgot that physical therapist forgot this. But I think being prepared that that's going to happen. And so doing that yourself and having done either looking at an outside firm or doing an internal audit, I think there's ways to do an internal audit. You can have your practitioners do some of that internally, right? Looking at charts for looking at each other's charts at some level, right? So it's like, let's check each other and make sure that we haven't missed things. And then we have a process for that. And there's a policy related to that you've got to make sure you're compliant with HIPAA in the way that you do it, but just making sure that you've taken the time to actually sort of check your own charts, so that when a buyer goes in there, you're confident, you know what they're going to find because you've seen it yourself and you've seen it pretty recently. You have some regular cadence that you're doing some kind of an audit.
That's great. That's great. So, Morgan, any questions from you? Any questions from you from your side too, to Brian or us or me?
No, I think this has made a ton of sense, and very helpful, Brian, to hear from Pennett's perspective how all of this kind of gets put into action. So this is great for me too. Great.
So in conclusion, I love that because the trust part is the exit and getting all this together, but operating, making sure your finances in order, optimizing, making sure that all this data is at your fingertips with the right dashboards, and that you're having that daily management, weekly management, and that you can really change those EBITDA margins if clinical results and revenue is growing, and then the exit part of the trust. So we would love to show just a solution of how we automate so many of these steps from our side, and how we help with the discipline, and that how we really, these 3 steps are the foundation of this company. And we'd love to show that. So with that, we'll show how our system works.
We're excited to share a demo of our system that our world-class team has built. The Montauk AI system runs your M&A process end-to-end, from diligence through close. We start here in our company dashboard, which includes a network of strategic acquirers and financial sponsors, all tracked, scored, and ranked in real time by our proprietary buyer intelligence engine. So let's show you how it works. Once a company engages with us, they are onboarded through a secure link, prompted to upload their past 3 years of financial statements and a EMR export. From there, our proprietary agentic engine, STAS, goes to work. STAS automatically establishes financial baselines and identifies the business model, whether hospice, home health, personal care, or digital health. It then builds a custom financial model in real time using a dual-layered architecture. It identifies revenue and cost drivers, revenue concentration risk, benchmarking, and EBITDA adjustments before a single buyer ever sees a number. First, a bottom-up forecast starting from visit-level data, average length of stay, and reimbursement rates, projecting 3 stress-tested scenarios. Then, a top-down model analyzing reimbursement trends, demographic tailwinds, market dynamics, and velocity. When a sophisticated strategic or private equity sponsor runs their own model, ours holds up in the room. Our valuation suite calculates what the business may be worth by running several analyses in parallel. A discounted cash flow analysis, a comparable company analysis using trading multiples from both private and public transactions sourced through multiple financial data platforms and proprietary pipelines. These methodologies are synthesized into a valuation suite, allowing owners to understand the range of potential outcomes before ever sitting at the negotiating table. Now let me show you one of the most exciting components of the system. The platform generates a fully polished, investment-grade, confidential information memorandum in minutes. As clients turn on the Operate and Optimize investment tools to build their internal strategic plans, those same inputs are automatically transformed into 65 to 90-page strategic marketing documents, the same materials used by sophisticated sell-side advisors. Everything is synthesized from live intelligence flowing through data pipelines connected to our 22 proprietary sources. The output is a strategic presentation that reflects the company's brand identity, clearly communicates its growth story, and positions the business the way sophisticated buyers expect to see it. It includes leadership profiles, geographic coverage, financial highlights, projections, margin expansion trajectory, and KPI benchmarking against comparable operators. These are live documents continuously updated in real time as the company operates. What begins as a system used to run the internal operations of the business ultimately becomes the institutional quality marketing materials used to take the company to market. This document walks into the room before you do. On the platform today, we have already generated over 500 buyer matches and facilitated 55 live meetings through the system. Now let's show you why buyers love working with Montauk AI. First, qualified deal flow on their preference. We have over 250 pre-qualified investors and strategic buyers on the platform, helping investors get deal flow. Buyers receive opportunities aligned with their investment thesis, with the ability to set geographic preferences and target sectors. Second, organization readiness. Companies coming to market are organized and transaction ready, reducing diligence friction. Third, faster time to value. Prepared information and structured processes shorten the path from first review to closing. Fourth, instant matching. Buyers can immediately see companies that match their criteria. Fifth, real-time notifications. Investors receive email alerts when new deals enter the market, ensuring they never miss relevant opportunities. To explore these capabilities further, we invite you to schedule a full demonstration. Montauk AI brings clarity and confidence to every transaction, improving close rates from day one. Montauk AI. Operate, optimize, exit. Realize your maximum value today.
Great. Brian, Morgan, what did you think of the demo?
Yeah, it's fantastic. I would love it if we had something like that from every seller. It'd be great.
Well, thank you.
So
thank
cool
you.
to see it.
Thank you.
Yeah, I was going to say, so cool to see it. Sorry, Jarrett, go ahead.
No, so much. So really what I love is the intersection of software and investment banking, and then the intersection of operating and optimizing. You don't have to sell your business to use us. But most of our clients are actually use us for forecasting and consulting for operating, but it's great business. And the thing I learned with working with you, Brian, is you're trying to buy great businesses. There's so many people out there that think, I'm sick of this company, now it's time to sell. That is the opposite. The idea is you want to gain confidence. You want to get every number down. You want to have your fingertips. You want to have the numbers at your fingertips. You want to say, this is where we're going to be in 3 years to somebody like yourself. You want to have these great AI tools, and then you want to facilitate trust with somebody like a great buyer like yourself, Brian, and then you want to have them have success with your new company. And you want to be a part of their team and wish them luck. So thank you, Morgan. Thank you, Brian, for just walking through your advice to so many of our registrants today. And Morgan, anything else before we open it up to questions?
Not really. One of the things that was interesting to me from the demo was that it says it's updated in real time, because I assume that helps providers actually kind of key in on the changes that they're making and how those are moving the needle. That was one of the interesting takeaways for me, is that you could check out that data and it would be changed from the last time you saw it.
Right. Yeah. Because in the past, everything was so people dependent. You make a deck and then it's static. But if it's really hooked into the operating metrics of the company, everything is updating. Decks, models are all updating. And unlike, hey, we're going to sell our company, let's give this information to Brian now, this is what you should be running every single day. The clinical team should be seeing what census is and be running that. And then it's turned into, this is what you present when you're finally selling. But it should be running the business. So yes, I love that. Brian, anything else to add today from your side?
No, thanks for having me along for the ride, and hopefully we're able to offer some useful information to folks. And Pennant we're always actively in the market, just looking for opportunities, and so just glad to get a chance to hopefully share a little bit of insight for as folks consider to potentially do that themselves.
Awesome, fantastic. Well, now I think it's time to move into Q&A, right, Jarrett?
Yep.
Perfect. Thank you both for the presentation, sharing your insights. I want to open it up now for some question and answer. So as a reminder, if you haven't had a chance to submit your question, please do so using that Q&A box. And I want to start with some questions that I have. How do you measure, you were talking a lot about, trust and maybe some of those, I think Brian used the word like squishy, some of those softer things. How do you measure culture when you're acquiring companies?
Yeah, that's a question for me.
Yes, either, anyone.
I think, again, it's a little bit hard, but I think part of what you're looking for is like, do you have some tenured employees, right? It's a good indication that folks are happy and want to stay. That's not the only variable, because sometimes folks stay because it's comfortable. They're not being challenged as well, right? So longevity can matter. I think part of the way that we see that comes through in like the reputation in the community, and right, because happy employees and happy caregivers are treating their patients really well, right? And you can get a feel for kind of what's been promoted as culture within the company by how those folks are interacting with the community and how they're treating people. And then, I think there's a little bit of, you can feel that out as you're potentially acquiring someone. You're asking, like, what are their goals? And if they don't mention the people at the company as like, oh, I'm concerned about them, I'm concerned about my legacy, this business I spent 20 years and I want it to do really well, or they're not really worried about what's going to happen to the employees, that's usually like a little flag for me that, like, maybe the culture isn't great if the owner's not really worried about what happens to the people when they sell. So.
Yeah, I will add, I love that squishy. I'm going to use that, Brian. But you see the owner's eyes open up when they talk about the clinical results. That's really the only clients we ever have, because that's the problem we're also trying to solve, is those clinical results should be monetized too, for more evaluation at the end. But you should, if they're not talking about the clinical results in day one, that's also a worrisome piece, because great companies really have that in hospice and home care.
Absolutely.
Perfect. Thank y'all. And whoever wants to jump in on this next one, what are the 2 or 3 operational metrics to focus on that are maybe not so obvious?
I don't know. I guess
the clinical diligence piece is so big. Like, that is one of the reasons why things get hung up at the end. Getting that in line is really important. Everybody knows the EBITDA, the margin, getting to a healthy margin profile, but that is something that definitely people wait way too long to really address.
Yeah, I think that's right. And I think it's more than just saying I had a clean survey, right? That's great if the survey came back relatively clean. That's obviously a very good thing. But I think it's more than that. And so when you look at things like, there's different metrics and different companies that will do, things like star ratings, or they'll do a score out of 100, or different ways to kind of measure some different clinical metrics. Value-based purchasing, that's becoming a more significant issue in places, right? That's, again, sort of a function of how you're performing clinically. But I think Jarrett's right. Like, I think a lot of folks are worried about, like, what's my margin or what's my revenue look like, but forget that the quality of all that is contingent on that you're providing really good care, because that revenue and that margin doesn't persist after a sale if you've had poor clinical quality, because at some point that does come back and catch up to you. It always does.
Right. And Brian, one for you. What separates Pennant as a strategic acquirer?
We're the best. I think, I think there's probably, everybody would say different things about, I think the feedback I've gotten from potential, from sellers is the certainty to close and the transparency. So if you're often, we maybe won't be the highest bidder, for example, on a potential opportunity. And then a year later, this has happened more than a few times, they come back around and say, we've had not 1, but 2 terrible experiences of deals falling through, and we want to do a deal with Pennant now. And then we have a really smooth process. I think we really care about the process being positive for the seller. We care about the employees having a really good transition. And so certainty to close is for sure one of those. The transparency during the process, I think, sets us apart, of just from the get-go, from the time that we submit an LOI, what you're going to get from us. We try to share that before we ever even submit an LOI, that this is how long it'll take us, and this is how we're going to communicate with you, and this is how much we're going to offer you, and this is the time to close, and this is what the escrow amount that we're going to retain is going to be, or this is how long you're going to be involved because of the chow process. All that's pretty clear from the beginning. And then, I think Pennant's unique operating model as an operator flows over into us as a buyer as well, which is we're not a corporate heavy organization. We really treat each of our agencies like they are locally owned businesses because we really think healthcare is best delivered at the local level. And so that means that we have local operators who are supporting the transition and who know that community really well. And so when we talk about the actual transition period for employees and from owners, they're interacting with folks who are really their peers, maybe even in a nearby market or in the same market in some cases, if it's a large enough market that we would have multiple operations. And so there's peer-to-peer relationships there, just like we have within our company. That's really our accountability model, is a peer accountability model. So I don't know, those are the things I think that set us apart from maybe a potential other buyer you might find.
Perfect, thank you. And one of the things that I hear from providers so much is the just sheer number of vendors and technology partners that they're working with or are out there in the field. So Jarrett, maybe you can start with this one. How can providers start consolidating vendors and technology partners to better operate their businesses?
That's such a great question. So when we were going through the operating side, we went through a lot of the relevant data relevant data that's needed. Sometimes that can exist in 20 different sources across the company. But the key is to have all that flowing into each other. And that's just such a core part. Does everything flow into the EMR? You know, what is outside of that? Why? Because if you could really get that part there, it gives confidence to the next group who's acquiring them. Wow, this group has their technology in order. I can run it now without that owner there. And now you're now you're in a spot too where you're taking advantage of being a technology company. You're taking advantage of the newest and latest, greatest technologies. And you're not just a run-of-the-mill hospice company. You're not just the run-of-the-mill home care, home health agency. You're really leading forward to say our biggest problem is pipeline. Our biggest problem is referrals in this county. We're working on that. Not just, hey, we're having a hard time keeping our nurses. Like you're being able to ask and answer harder questions.
Perfect. And one last question I think is, what target EBITDA margins are healthy in home care, hospice, and home health for whoever wants to start that one off?
So I would say, you know, we certainly would love to be around 20% on margins, right? That's our, I think our target for our good operations is to be at 20 or better. Not all of them are there. Some of them are a little below, some of them are a little above. But that's you know, I'd say, and if you're not there, it doesn't mean you're not healthy, right? I think you could be at 10 and realize like we got enough room to not be, you know, panicked. But that's where we'd like to see things.
Yeah, and that is such a great question. And that's really the idea behind the operate, optimize, exit framework. If you know the valuation of the company and you can see that data point, it helps with changing the operations. And I say that is, so many companies are one-to-one. One revenue dollar equals one expense dollar. But if you can actually see, okay, now our company's worth $50 million, company's worth $50 million, and that's really predicated on the EBITDA. And we can now adjust certain parameters to get more in line with that. It helps with operations of changing the business, because of course everybody likes more things in the company, but being efficient and being lean is hard. And if you have that number, which Brian said, of that 20% on hospices and home care, that's great from a benchmarking, but also knowing your valuation is huge, because that's like the extra carrot of why the organization is going to change and really owning the P&L. So great question.
Perfect. That will wrap up the Q&A section on my end. Thank you, Jarrett and Brian, for your answers. Do either of y'all have any final thoughts or takeaways before I wrap things up the rest of the way?
For me, thanks for the opportunity to visit with everybody that's watching, and thanks, Jarrett, for inviting me.
No, and I just get such a thrill out of people's life work, starting these businesses and having so much passion about it, running it for 20 years, and then changing hands to somebody like Brian or some of these great investors out there, and then just making sure that final thing is done the right way so that your baby can be seen in the right light and have success at become a baby at a new place and grow. So I just love this. Morgan, I'm so grateful to the home health care team for letting us have this webinar, and all of our partners for believing us, and our clients too for giving us the opportunity to work with them.
Amazing. Well, it's been a pleasure on my end. Thank you everyone for coming today. Again, if you're watching on demand, still feel free to ask those questions in the Q&A box. If you enjoyed this webinar and you want to share it, as a reminder, it will be available on Home Healthcare News website, and you'll also receive a link in your email, and you can forward that to someone you know who might enjoy this webinar. Thank you again, Jarrett and Brian, for taking the time, sharing